So, you're thinking about making a move in 2023, but you're concerned with what's going to happen with the greater Seattle real estate market.
Predictions are all over the place. Some people predict doom and gloom and a crashing market. Others think that we'll see appreciation this year. So stay tuned for our 5 predictions. Let's get into it.
Before we look at this year, let's go ahead and take a look back at the past 2 years and see what took place then. First, let's take a look at 2021, which was a record-setting year.
It really was. It was a year for the record books. Nobody experienced such a white-hot seller's steroid market like this before. So in 2021, we had real estate values go up anywhere between 20 and 30% across the greater Seattle region.
Now, how about 2022? That was also a record-setting year, but for very different reasons.
Yeah, 2022, we started with rates at 3%, really low, and a very robust seller's market. Then, just several months later, rates rose all the way to 7.5%. So we had never experienced the Fed raising rates more than double in such a short time frame.
Yeah, and I remember we had several listings during that time, and just the drastic drop-off of buyers and people coming out to look at homes from one week to the next in between when those rates rose was phenomenal. Here we are in February of 2023. What can we expect this year? Well, first off, we are expecting to see more of a normal balanced market. What does a normal real estate market look like?
Well, it's definitely not what we experienced in the last 2 years of a steroid market going straight up. And neither is it a market in like 2008 or 2009 where it was heading straight down. A normal market is going to have fluctuations in the single digit range. So real estate tends to go up over time, but we also see pullbacks like we're experiencing now. And we predict that real estate in greater Seattle will soften for the first part of 2023 in the single digit range. So for those of you predicting that the real estate market's going to crash, we disagree. And we think it's going to soften maybe 5 to 7% in the first part of 2023.
Okay, so why will it be a normal market?
Well, we have 2 very opposing forces. On one hand, we have an unaffordability issue for many, many buyers. When rates go from a normal of low 3s to a normal of mid 6s or low 7s, it just puts buyers on the sidelines. They can't afford the home that they were excited about. On the other hand, we also have a low inventory problem, a shortage of supply of homes. So if we had a bunch of homes come on the market all of a sudden, then the real estate market would crash. But we're not seeing that. And we'll get into that in just a minute.
Next, what do you think will happen with home prices in terms of appreciation over this next year?
We probably won't see appreciation this year. And if we do, it's going to be very slight. Again, that 5 to 7% depreciation on a home's value is more likely, at least in the first part of this year. And then as rates begin to come down and more buyers can enter the market, then we do think prices will start to climb again. Although that could be delayed until 2024, and we might just see a stabilization in 2023.
Yeah, and if we take a look at 1 year ago and compare those home prices to what we're seeing in January of 2023, we are going to see a dramatic decrease because things were so high a year ago. But I think coming into the mid part of 2023, we will see more of that balance. So the third thing that we're going to be taking a look at is the number of sales that we're going to see across the region this year.
Right. In 2021, we had 6.1 million sales across the nation. In 2022, we had 5.1 million sales, and we're still trending down at a projected 4.8 million sales across the United States in 2023. So what does this mean? Well, fewer buyers and sellers are transacting, and here locally in our region, it means when we have fewer sales, it's going to keep sort of this vicious cycle of sellers not wanting to move because there's not a lot of homes for sale, and buyers are hesitant because they're not sure what's going to happen with the market.
Okay, so how are things looking regarding interest rates this year? What do you think is going to happen? Are we going to see more of an increase? Are we going to see them decrease? What do you think is...
Whatever happens, it's going to have a huge effect on our market. So currently we have, at the time of this recording, rates are about 6.5%. And to put that in perspective, we were at 7.5% just a couple of months ago. We think that rates will, as Papa Powell or Jerome Powell, the federal chair, has just recently risen the rates another quarter point. We'll see rates hover at this level or might even go a little bit higher, but we think the worst is behind us. We don't think we'll get to that 7.5% rate. Again, this year, we think that they'll start edging down as inflation comes down, because rates are only there at this high level to combat the inflation. Since we've seen inflation numbers get better and trend down, rates will also start to come down, which is going to be good for fueling more people's affordability.
Right, and if you think about it, most sellers will likely be buyers as well. So as those interest rates start to decrease, more sellers may enter the market, which will add more homes for sale, which will help everything.
Yeah, everything's so interconnected, that's for sure.
Now let's talk new construction. So in 2008, builders stopped building when the crash happened, and we've seen those ripple effects to this day. I mean, we have never caught up to the levels at which we should be. So that has really affected our market. Where do you think new construction is headed going into 2023?
There are three headwinds for contractors, for builders right now. One is the fact that there just isn't as much land available. So we do have a shortage of building sites available. Number two, it's also harder. There's more red tape. There's environmental factors to consider. There's also new taxes and burdens that the builders have to face when taking on a project that they didn't have to in years past. And the third headwind that builders are facing is the uncertainty of the market. We're most likely in a recession or heading to a recession. So if this lasts longer or is more strenuous, then it's going to impact them. So they're not likely to take these risks, especially when it takes a builder at least 12 months, more like 24 or 36 months from the time that they purchase a property to get the site developed, get permits and a home built and then sold.
So we've covered 2023. Now, as we look towards the end of 2023, where do you think we're going to end up as we head into 2024?
Well, I think with rates coming down over time through 2023, I think that's going to give more confidence to buyers and allow them to re-enter the market, especially since rates were at 7, now they're in the mid 6s. And if we end the year at say 6% or in the high 5s, that's going to give buyers more incentive to get into that home of their dreams. And we'll probably see a stabilization at that point of prices not dipping further than what they've already done in the past few months and what we're expecting them to do here. So
yeah, I mean, buyers really had that sticker shock last year when we went from 3% to 5 to 6 to 7. So now coming back down to 6 or even 5, that's going to feel a lot better, open up a lot more opportunities.
So there you have it, folks. Those are our 5 predictions of what 2023 will hold for our real estate market. But we want to hear from you. Did we get it wrong? What do you agree with? What do you disagree with? Please comment below what you think 2023 will unfold for the greater Seattle real estate market.
And of course, as always, things are constantly in flux and they are affecting everything. So as things change throughout this year, we will be updating our predictions. So be sure to hit that subscribe button so you don't miss out on any new information.
See you in the next video.